You're listening to Mortgage 101 with Clinton Wilkins and myself, Dan Olstrand. On today's episode, joined again by Chris Johnson from Sagen to chat about different types of income, specifically self-employment.
Looking ahead on how federal enhancements to refinance options for secondary suites will help homeowners build value in their properties.
How lenders and insurers are starting to soften their position on self-employed borrowers.
And what to expect from the Mortgage 101 team during the rest of Financial Literacy Month.
Chris, in the last segment, we were talking about the products and what you have available. The market changing a little bit in Nova Scotia to deal with some of the housing issues that we have. We're talking a lot now about granny suites and secondary suites and those kind of things. How does the insurance world take those into account?
So I said earlier, lots of change, constant change. Another change that's literally just come out in the last couple of weeks with the federal government is that they're going to allow some flexibility for people to borrow off their home if they are looking to put in some kind of a secondary suite or, as you say, like a granny suite. It's very new news. It literally is breaking in the last couple of weeks. So it's not something that we have a lot of details on exactly what it's going to look like yet. But just to give some sort of background perspective, up till now, in the last number of years, anybody looking to refinance their home, if they own a home and they want to pull money out for whatever financing they're looking to do, it would be capped at 80% of the value. And as per the government rules that have come out, it looks like they're looking at allowing up to 90%. So we don't know much more beyond that because, again, it's literally hot off the press.
Basically, what you know is what's in the news
Pretty
so far.
Exactly at this point, yeah. But I mean, it is January 15th is the date that they've indicated in their news release. So it is fairly right around the corner. So it's going to be interesting to see what it'll all look like, what some of the particulars will be. But I think there's certainly a need for it based on the what we're seeing out there as far as what's available in the market to buy. So
with some of these changes, I will just go out on a limb. And I'm going to assume that Sagen and the other insurers are expecting next year to be busier than this year. Is that kind of what you guys are projecting, or that we're kind of still in early talks, days?
It's early days for all of it. I mean, there's, as you know, Clinton, there's so many variables to what makes a market busy or
and who knows what the uptick even is going to be on these programs.
Exactly, that's exactly. However, in saying that, anytime you make changes like this, it puts attention on the housing market, it puts attention on homeownership. Mm-hmm. People who may have looked in the past and are sort of thinking, oh, geez, like all these things are happening, or even existing homeowners who've maybe been dabbling with, could we rent out our property or part of our property? And now all of a sudden this potential change is there, and they look at their finances and think, wow, this is a real option for us. Yeah. So there's no question it could certainly spur some activity. A
couple times in my adult life, I've owned my principal residence and I've had an in-law suite. Yeah. It's just such a great way to have income that helps pay my mortgage. I've done it myself. I've been single. I don't mind renting out basement apartment. And with the way the rents are, it was almost enough rent that was paying my mortgage.
Yeah.
As wild as that might sound, it was just so beneficial. And I think that's going to be a great way to, increase the income in a household, really with probably a very low amount of effort overall.
Absolutely. No question.
I think it's going to be certainly very positive. There's all kinds of different income out there, Chris. And I know, obviously, from an insurer perspective, from lender's perspective, we look at all kinds of different income. Obviously, there's T4 income, like you would have, Dan, from working your regular 9-to-5 job at the radio station.
9 to 5. Who works that?
I don't know. I don't know who does 9 to 5 anymore. Maybe Dolly Parton, but that's another song. Obviously, pension income. There can be investment income. Obviously, rental income. But more and more Canadians every day are becoming self-employed. And really, I think there's some really great programs out there. I know there's some programs from the insurer, so we want to hear about that. But people are even becoming self-employed in their existing fields. So, for example, maybe they worked for a plumbing company and then they bought the company they worked for. Or they were working for a plumbing company and they went out on their own and they got some contracts. And we're seeing those type of things. And lenders overall are accepting that type of income as documented income. That was verifiable income. Maybe we'll look at the last 2 years of what they were making at their employer and they'll accept it going forward. But on the flip side, people are becoming self-employed in obviously new industries and new businesses. And that can become more tangly. I hear from so many borrowers that, maybe have dealt with a bank branch and they've been turned down. Notoriously, branches, they hate dealing with self-employed people. More tangly, more documents. They don't understand. There's so many different types. I'm going to throw it to you, Chris, and maybe you can just give us a high-level overview of some of the programs that are available from an insurer perspective for self-employed borrowers.
Absolutely. And I hear everything you're saying. There's so much opportunity here, so much more for various reasons, lifestyle, opportunity. People just want to be their own boss or whatever the case. And so self-employed is certainly definitely a segment of the market that's, I would say, on the rise, and certainly lots of opportunity. But with that comes some definite curveballs sometimes.
And there's some risk.
Income. And some risk involved, exactly, because different from what you were saying, the 9-to-5 job, again, whatever that is, but you're kind of guaranteed a paycheck of a certain amount, right? Whereas with self-employed, it is variable income, and it does fluctuate week to week, month to month. So you mentioned, Clinton, in some cases, verifiable income is an option where you can track back and say, okay, over the last 2 years, they made an average of this, and that could be what an insurer
and that's
or
the
lender
easiest.
would look at.
That's the easiest. That's what we consider like a full documentation style.
Exactly, which is really almost like a standard application. Right. Where it gets a little more, I guess, interesting is when you get into a scenario where you can't do that as much, or maybe someone's business is generating more income that they're showing on paper, essentially, for various reasons, right? Depending on the type of their business. And so that's where we can look at other programs. And for a number of years, Sagent's had what's called a stated income self-employed. So essentially what that does is allow us to look beyond that verifiable income and look at, okay, is there additional income here that's reasonable based on the type of business they're running, that we're comfortable potentially using some additional income to help service or look to approve that application. So, and that's where working with a professional, Clinton, like yourself, is key, because you know these programs better than anybody, and sort of working with the customer, look at their situation to see, okay, how are we going to apply this? So it really is very case by case. There's no sort of easy yes or no in those. We really need to get the information, get all the details. Obviously, I know you mentioned credit earlier.
And we ask a lot of questions.
Ask a lot of questions.
We get a lot of questions. We get a lot of documentation. And I think, that's the best way forward. And, these programs are available, but not everyone is aware. Obviously, the more transactions you do, the more you know.
My world as is evolving in the business that I'm in. We're moving away from it being a salaried sort of, this is what you're getting paid, into the gig economy and into the freelance economy. This question might be for the both of you gentlemen. How does that work for somebody that is working contract to contract, gig to gig? Is it the same? Is it the same rules, or is it different than somebody that's self-employed? It's
a really good question, and the thing I first would say about that, it actually defines the difference between a lender and an insurer. So really important to look at what the lender's guidelines are. So if you're working with a bank, a mortgage bank, a credit union, they will each have their own individual guidelines around income, right? So it always starts there, because they're going to have their own internal rules, and then matching it up with an insurer and what those guidelines look like. So,
it has to satisfy the lender. If the lender is not going to be cool with the income, it won't even get to the insurer.
Yeah.
The insurer is basically going to decide if they're concurring with the lender or not. And typically, some of these lenders will force these transactions to a manual review to say, hey, here's what I got. The person was employed for 2 years, now has gone out, same industry. Are we okay with how this is presented and the overall risk of the file? And at the end of the day, it's risk versus reward, a lot of moving parts. And that's what I love about mortgage lending. Income, assets, credit, it's all different. And that's why it's so important to talk in November, obviously, about financial literacy. And it really starts at home. So I think looking in the mirror is really important. Open your mail, know what's going on in all of those categories.
It's not Financial Literacy Week, it's Financial Literacy Month, because there's so much involved. And Clinton, you and I were chatting off the air there, and we're going to keep this moving forward, and we're going to do something special to mark Financial Literacy Week.
That's right. We're obviously going to talk about it all month. There's going to be lots of stuff on our social media. You can check out things on our website as well at teamclinton.ca/radio. But we are going to be doing a live show. I know people love hearing us live on News Radio 95.7. We're going to be taking some calls, and we're going to be bringing on some other really great guests onto our show. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.